You might have wondered how a wealthy family passes down wealth through multiple generations and still remains affluent, right? Becoming generationally wealthy isn't achieved through conventional methods like solely owning and operating a business. Instead, the ultra-wealthy exploit laws in their favor with the help of lawyers and financial planners, for which they pay millions. Ultra-wealthy individuals who end up making millions of dollars typically have very complex legal structures set up for their businesses and assets. Let's cut to the chase. They have legal structures such as trust funds, which might feel complicated, but we'll break it down for you. It's straightforward and something you can replicate in your day-to-day business. If you earn good money, you can be ahead of the curve by saving and reinvesting it. They transfer their profits from their operating businesses, which are their normal profit-making ventures. But if they were regular business owners, they would pay the standard corporate tax rate, around 25% in the United Kingdom. However, the wealthy avoid such issues by transferring their profits to holding businesses set up in different countries, such as a Nevis LLC in the Cook Islands or a holding LLC in Singapore. We have a separate video on our channel on holding LLCs. Back to the video. From there, it is transferred to a non-revocable trust in another country. These countries are strategically selected based on their tax rates and legal frameworks, advised and executed by professional financial advisors and planners. This ensures that the accumulated wealth outlives them and is protected from lawsuits and divorces. They cleverly avoid taxes by structuring their businesses so that dividends are typically tax-free to the holding LLC. The transfer of assets between businesses under the holding LLC is also tax-free. Mergers and acquisitions under the holding LLC have tax exemptions. As the CEO of the holding company, they can write off taxes. Even upon death, their children inherit their wealth without any capital gains tax, which only happens in a family trust. If children inherit wealth in a conventional manner, they would face hefty capital gains tax. Elites exploit legal and procedural loopholes in the system. The purpose of keeping wealth in different countries is to slow down and complicate matters for legal authorities, as they choose small countries with inefficient systems. Dealing with information from multiple countries makes it almost impossible for legal authorities, especially when systems in other countries are corrupt. This safeguards the elites. These countries also impose low profit taxes, such as 4%, compared to the US, where it can reach up to 40% in certain states and income brackets. Consequently, the rich can accumulate enormous wealth and protect it for future generations, while ordinary individuals, unaware of these strategies, spend their lives paycheck to paycheck, paying taxes. Let's look at an example of how Nike uses a similar way to avoid tax. Nike earned more than $10 billion in U.S. profits from 2008 to 2015, but only paid 18.6% in U.S. federal taxes during this time. This is just over half of the official U.S. corporate tax rate of 35%. Of course, using offshore tax havens to shield profits from federal taxes is just one example of how Nike exploits the law. In fact, Nike reports having 54 subsidiaries in places that are widely considered to be tax havens. For instance, in past years, the company reported about a dozen subsidiaries in Bermuda, a tax-free British territory, even though it does not operate any stores in Bermuda. It is likely that, instead, these subsidiaries were set up to house Nike's trademarks so that the U.S. parent company can then pay royalties to those subsidiaries, which will not be taxed in Bermuda, and subtract these payments from its own U.S. tax bill as business expenses. One way Nike manages this low U.S. tax rate is by shifting large portions of its domestic profits into offshore tax havens. As of 2016, Nike had $12.2 billion in offshore profits, on which it would owe $4.1 billion in taxes should it repatriate those profits. This secret knowledge, worth hundreds of thousands of dollars, is being shared with you for free, whereas the wealthy pay millions to financial advisors. Moreover, by not directly owning their businesses, they avoid accountability for any lawsuits. Rich people engage in these sophisticated games, while ordinary individuals like you spend your entire lives paying taxes without even being aware of what actually happens in the world of the wealthy. If you like the video and want to see more of such content, then like and subscribe, as it lets us know to make content like this.